How do you see stocks in the second half of the year? We're in a bit of an unusual situation. The Fed pausing in a historically quick rate hiking cycle. We have some recession concerns. At the same time, we have the disruption of AI.
I'm not concerned at all. The trend of the market is up. And I think as long as the trend's up, you continue to trade this thing to the long side. Any pullbacks that you get in the market from here forward are a buying opportunity, in our opinion. I think you've got to sort of shut off all this negativity that you hear out there, recession, the Fed, and just trade what actually is happening. What's happening, Frank, is the market's going higher. I think we're in a new bull market, and the trend's up. Don't fight the trend. Like you don't fight the Fed, don't fight the trend. But I think that the Fed is starting to slow down. I think they've done their job.
All right, let's not fight the trend. Let's put this all in perspective. If we look at the historical averages, the S&P likely to rise 4% in the second half of the year. That would put it at about 4670 at year end. Levels we haven't seen since all the way back in January of 2022. That's a pretty big jump. We also have the potential for more Fed hikes. Right now, looking at the CME Fed Watch tool, 86% chance of a quarter-point hike in July, just 3 weeks from now. How does that influence your theory that we're in a new bull market and the stocks have a lot more upside?
Well, like I said, another thing too, Frank. Think about this. You've had a great first half of the year. Think of these fund managers and these hedge fund managers that are behind the curve now that maybe didn't participate in this great upswing that we've had. So they're going to start to chase it the last half of the year. When you look at these great first halves and you look at these great second halves, the reason the second halves are so great is because you got people trying to chase it now. You got FOMO, fear of missing out. So there's going to be a lot of money coming back in. You've got $5.5 trillion in cash. That's an amazing amount of cash. I don't think I've ever seen that much cash on the sidelines to fuel this thing higher.
So it's just cash on the sidelines. So when you talk about cash on the sidelines, we keep hearing about the market broadening out. Is this cash on the sidelines going into that big tech trade? Are you still confident in that? And I have to ask you again, the possibility of another Fed hike. How does that change that AI mega cap tech trade in your mind?
I don't think that it changes it at all. I think that mega cap AI, I think, is going higher. I think that is the future. I think that there's so much opportunity there, and I think people need to jump on the bandwagon because I think there's a lot of money that's being missed if you're too afraid to get into this market and this nice uptrend and these great stocks that are doing wonderful things.
All right, so you're still on the bandwagon, but you gave us some other picks. I want to start with one of the picks you gave us in the payment space. Why are you so bullish on payments right now when you're saying all the activities in the mega cap tech trade?
Well, like you just mentioned ago, it is starting to broaden out. But what I like Visa, one of the reasons I do like Visa is because it is breaking out to a new 52-week high. I love 52-week highs. The way stocks doubles is they've got to make a 52-week high the whole way up to double your money. But they just had a couple of acquisitions, which is going to broaden their revenue base. It's going to broaden out their profitability. So and people are spending money. They're swiping the card. It's wonderful.
But Vance, they are spending money, but they're going to run out of money sooner or later. A lot of people are spending, but they're technically spending on credit. I know it's money to a Visa, but it's on credit.
Yeah, well, on credit, but look at this. This economy is doing well. Everybody seems to think that this economy is not doing very well. It's doing great. And I don't think we're going to go into a recession. I really don't. I think that Fed Chair Powell is going to actually sidestep this whole thing. I think that he's raised rates as high as he needs to raise them. I don't think he needs to do another point or two. I think that the markets or the inflation is starting to control itself. I'm bullish. I mean, I'm bullish.
All right, so according to our notes, you're 95% invested in the market right now. That means only 5% bonds. You're going to stay that way the rest of the year?
Well, no, we're more than 95 now. We're close to 99. We're just about all the way in. The way we're trading our money now, Frank, is we're buying on pullbacks, we're buying on breakouts, we're rotating our money to different asset classes that we think are going to outperform. Again, AI is our top holding, mega cap growth is our top holding, but there's so much opportunity. I encourage people, get off the sideline and take advantage of this wonderful new bull market.